Hello everybody, welcome to our channel. My name is Yasin Ninov and here is my colleague Kostian Tola as well as Alex Mayat. The reason we have gathered today is to discuss China's slowing GDP growth and its effects. But before we delve into the subject of our topic, we're going to turn to Alex so he can explain what GDP actually means.
Yep.
Alex?
GDP stands for Gross Domestic Product, and it is the monetary value of all the finished goods and services produced in a country during a year. It is commonly used as an indicator of the economic health of a country. There are two ways to measure GDP: the final product approach and the value added. The final product approach is the sum of all products of a new goods and services done by the households, companies, government, and foreigners. And the value-added approach is the sum of all the incomes derived from the new products and services, such as wages, rents, interest, profit, and statistical adjustments.
All right, thank you very much, Alex. Now, it was reported that the economy of China grew by 6.9% last year. Now, probably they use the same methods as you've described. Now, this is a good indicator, and people should be happy about it, but why aren't they?
Well, the fact is that a lot of this data that the government is releasing is actually not real. It is believed to be masked. The events which have led to this conclusion date back to 1998, at the time of the Asian crisis. Back then, many Asian countries suffered from recession. Nevertheless, China reportedly had staggering growth of 7.8% at that particular year.
All right, that's a very good indicator. I hear that economists claim that those numbers are probably fabricated or smoothened to say the least, and in fact should have been close to 5% rather than 7.8.
Exactly, you're right. Ever since then, China has been under a lot of scrutiny.
All right. Well, in order to explain the consequences of a decline in the GDP growth of China, we'll first examine what actually causes the slump. And here by my side I have the expert in this field, Kosti. So could you tell us why we're witnessing this?
Well, yeah. First of all, China's economy has been built around the factory sector. It is easy to be the factory of the world if you have a huge yearly growth in population. But since the one-child policy was introduced, this demographic growth has been recessed. The consequence is an elderly population. This means that the salaries will raise in the future, and because there will be less workforce. So China can't export goods at such a low rate that they have used to do until today.
All right.
Secondly, the main trading countries of China, such as Europe, Japan, South Korea, they are also in a recession phase. That means that their demand towards the Chinese market is slowing down. So this slowdown of these countries has huge effects on the Chinese market. Thirdly, the Chinese government is trying to change China's economy to be domestically driven and focused on services. Until today, the manufacturing, as I already mentioned, and the export were the main resources of China's. To add, in 2008, during the financial crisis, which we also suffered from in Europe, the Chinese government responded by spending $568 billion into the economy to stimulate it. This might have helped for short-term interest, but today China feels the consequence of this action. The government is in a massive debt. But not only the government is in debt, in 2014 actually, China cut the borrowing costs of money, which might have stimulated big investments of the public. But today, these loans have to be paid back, and instead of the public spending its income on the real economy, they rather work to pay off the loans. Last but not least, China abandoned its currency peg with America in August 2015. This means that the US dollar and the Chinese yuan had a fixed exchange rate, but this has changed now. The Chinese government did this in order to make the country more competitive, but it also caused massive shockwaves in the world's markets. This process reduced the exchange rate of the yuan 3 times in just 1 week.
Really? All right. So could you just sum up what you just said real quick?
Right, since this was a lot of information, I'm just gonna
Yeah.
sum up a bit. And
A lot of the digest.
yeah, well, China is changing into a more domestically focused country since the amount of exports are recessing. Otherwise, the slowing demographic growth will be a problem for the future. In case of China being a manufacturing focused country. The Chinese government is lacking of funds for such a transition phase because it has massive debt since 2008.
All right. Thank you for the explanation, Kosti. Now we turn to Alex, who is actually in China as we're speaking, and will be giving us inside information on what is really happening there, how like the whole slowing down of the economy is affecting China.
Yeah, well, thank you. There are three major problems: being the real estate, the banks, and also the change in the economy, as Kosti said. Well, before there was a rising population in China, and to sustain the growth of the population, a lot of money went into real estate. Now the offer is much bigger than the demand, hence prices are collapsing in the real estate. So people who invested all their money are losing it and can't afford to live anymore. There's also the financial market, such as banks, that are not well regulated, and there is a high risk of frauds and bankruptcy of the banks. So people who save their money in the bank could lose their financial assets and all the investments they have. There is also an important, as Kosti said, there is also an important transferring in the Chinese economy, moving from an industrial economy, like manufacturing of cheap goods, to a service economy such as health, tourism, education, and IT. This means that there's a lot of cheap factories which are closing down, and a lot of people are losing their jobs and cannot transfer to a high technological factory, because they're not qualified enough to work in those factories, and they cannot find new jobs. So they're unemployed, which also increases the unemployment rate for older people.
Right.
Yeah, these were the three main topics.
All right. Thank you very much for the learning experience, Alex.
So, but Yasin, now we have covered the reasons behind this slowdown of Chinese economy
Yeah.
and its effects internally. But what about the rest of the world? What impacts across the globe will a more severe slowdown cause?
Well, Kostya, first and foremost, a large share of the world's GDP comes from China. Thus, whenever China faced troubles, whether they're financial or economical, the whole world experienced it more or less. The new worries these days about China's GDP growth is based on is not that it's artificial, but that its investment engine is dreadfully unbalanced. Investment accounts for approximately half of GDP. Recently, its growth has been powered almost entirely by the state, and the slowdown in private sector investment has been astonishing, from growth of more than 40% in 2011 to just 2.8% in the first half of this year. In addition to the direct economic impact, China's economy has a massive impact on global capital flows. International investors or debt holders that lose money in Chinese markets may be forced to liquidate holdings in other regions around the world. Similarly, as a slowdown in emerging markets and commodities could spur the investors to move into cash.
Wait, you reached out to an interesting topic here. What do you think will happen if this trend continues, and what will happen to those commodities?
All right. Well, as the single largest consumer of industrial metals and other manufacturing inputs, the country's economic slowdown can reduce demand. Economy's deceleration is one of the main reasons for the sell-off of global commodities from iron ore to coal over the past 2 years. Now, the most recent example I can give to you is when the Chinese stock market bubble burst and China lost $4 trillion in a matter of a couple of weeks. Consequently, it had an effect on the imports, and the country decreased most of them to such a level that many countries who relied on the imports giant turned out to be in crisis. We can take an example in Nigeria. The country's currency devalued with 30% in just 2 weeks' time, and its GDP fell down immensely. Now, the reason being is that Nigeria is one of the biggest exporters of crude oil, and rubber, and China, as the biggest buyer, couldn't purchase the same amount as it used to before. So the whole financial data and forecasts in Nigeria came out wrong. The effect is emerging market currencies have lost strength versus the US dollar, which means they're receiving less real value for the commodities they sell to the global markets.
Yasin, can you name other countries that might be directly affected besides Nigeria?
Yes, of course. There are actually several countries with high exposure to commodities. For instance, Brazil. Brazil is a leading exporter of a number of different commodities like crude oil, from its new offshore oil plays to coffee grown inland. Another country is Peru. Peru is a leading exporter of copper, gold, and other precious and industrial metals to countries like China that produce finished goods. Third country can be Chile. Chile is a leading exporter of copper, which is the largest sector as a percentage of its GDP, primarily, and sells commodities primarily to countries like China. But of course, I could say that the countries that will be affected the most out of economic slowdown in China are the Asian neighbors such as Japan and Korea, Singapore, Vietnam is also developing as well. So yeah, basically that's about it.
All right.
So yes, viewers, this is about the slowing growth of GDP and in China and its effects, and we will be glad to see you next week.
Thank you for having me.